Good afternoon, good evening, depending on where you are in the world. It's just gone noon here on the East Coast. And welcome to TakeStock Live. This is Sam Evans with you, and I'm bringing this show to you live across Facebook, live across the internet, powered by StockAbility.com. Great to have you here as always. Remember, this is a live show, so at any point during the time of the show, feel free to type in, ask your questions, and jump on here as well. We love it when it gets interactive as well. I hope this Thursday, April 8th, is treating you well. We got a really fun show for you coming up today. We're going to be with you for about 45 minutes, although I always say that, and then we end up being on here for about an hour. I guess it's because we love what we do. Remember, we are here every week at 12 noon on Facebook Live. This show is also going to be repeated and recorded with a rerun straight afterwards. And you can also go and follow our StockAbility YouTube channel, where you can see a rerun of all of the previous shows as well, and also extra videos that our whole education team is putting out as well. Good to see Lisa Mann joining us live right now. And I'm actually going to be joined also by my regular guest, Brian Dumaresq, student momentum coach. Well, we're going to be doing a focus on futures. Focus on futures. You might wonder, what are futures? What are they all about? Why do I want to be interested in them? Everybody talks about stocks. We're going to be talking about futures, okay? What is involved in futures? What are they? They were downright scary to me the first time I heard about them, and then I actually dug into it, and I love them. I trade them every single day. I'm actually going to show you some trading results from today, from yesterday in our live trading sessions as well, and just really getting into the meat of it. So if you're looking for a little bit of education today and shedding some light on things when it comes to the world of futures, you are in the right place as well. But it wouldn't be a Take Stock Live show without doing a little market recap and seeing where we are. What is driving the news today? Top news headlines right now is, guess what? The S&P 500 made another big high. We have a brand new high of 4084.5. I believe last week, just a couple of weeks ago, in fact, just a week ago, we topped 4,000 points, and now the market is another 84 handles higher. What is going to stop this market? I don't know. I'm not even going to be thinking about it. And if you see me looking over here, it's because I'm looking at my other chart over here as well. But what is going to stop this market going up? I don't know. I don't care. I'm going to be ruthless on the downside, optimistic on the upside. And again, like I said, you going into hopefully the warmer spring months as well, relief in COVID. I think it's just going to keep going higher. We'll look at the rest of those markets in just a second. Although on the flip side, initial jobless claims here in the US actually did rise this week as well, or should I say last week. Mostly higher, obviously, but the Dow Jones Industrial Average saw a small gain, but not enough for a record close. So it is the S&P leading the charge. But also, yes, we have seen on here those initial jobs claims rising a little bit as well. 744,000 new filings for unemployment benefits last week as well, which is up by about 16,000. So from an employment perspective, not so great. Doesn't seem to matter. The market's shaking that off and still doing its thing as well. President Biden is going to unveil actions on guns. Okay, because of obviously the recent activities here in the US. Expected to unveil a series of executive actions on Thursday, today, addressing gun violence after a spate of mass shootings, which is incredibly saddening and incredibly worrying as well. Also, he's set to open negotiations on corporate tax hikes as well. A lot of people getting their back up about the proposed economic policy on tax hikes, and he's open to negotiation on that as well. We will see how that all goes as well. You know, I do expect taxes are going to be rising under this new administration as well. And there's a union in Amazon, in a union drive in Alabama, an Amazon union drive in Alabama saw a 55% voter turnout as well, with Amazon workers just unhappy with how they're being supported as well. Doesn't seem to stop Amazon doing its thing as well. We need representation for everybody who's working hard in today's day and age, doing the things that they are doing as well. Let's go take a look at the actual markets themselves, though. Let's just zoom on over to here and see. So here's your S&P 500 right now. That dominant upward trend, still huge, going to the upside here. And there's that number we talked about, that big number there, 4084.5. That is your new high posted today. I tell you what, not a huge day. It seems to have just ground higher on the day, but it is making higher highs along the way as well. Look, we have not had a down day for 1, 2, 3, 4, 5, 6, 7, 8, 9. Is this going to be 10 days on the upside in a row? 10 days in a row. Again, I've been saying it once, I'll say it again, there is no need to fight this upward trend. And if you are an experienced trader and you are familiar with the concepts of short selling, do go ahead, short sell, but be ruthless in your profit taking. That is actually something I'm going to discuss today. I'm actually going to show you a trade I did today on the Dow Jones, which was on the short side of things. If you don't know what short selling is, well, maybe we'll bring it into perspective for you a little bit later on today. Here is the Dow, a real lackluster day, a series of what we call dojis on the market right now. 4 very, very choppy days. That gap up on Monday, and we have just not seen that continuation in price as well. To me, that just gives me a little bit of a clue that potentially we're going to be seeing more pressure on the downside. It's like a spring coiling, expecting a little bit more pressure on the downside before we either pop higher or lower. Again, one we do remember is while the Dow is climbing higher, the S&P is climbing higher, the other indexes aren't doing as much. Nothing to really get excited about. I mean, I'll be honest with you, I love these kind of market conditions when it comes to short-term trading. I have zero problem with that. Let's go look at the little brother Russell, and you can see a very different picture on the Russell, where there's some extended weakness of lower lows and lower highs. Again, a big support area coming in right now, which is a key area. This area up here is going to be the major test, I think. What is going to happen at this particular point? Are we going to get a breakdown? I wouldn't be surprised to see a little bit more sideways action on the Russell, but struggling after an incredible 2020, really coming to this year just going a bit like meh. And that's the interesting thing. We've got this disparity between the major indexes and the smaller ones as well. Last but not least, the mighty NASDAQ, the tech sector that's seen so much. Today, another gap up. It doesn't seem like anything can really push a lot of this kind of, but coming into some major resistance right here and some big round numbers around 13,800 as well that you can see right here that we do need to be very much aware of as well. Again, this is just what concerns me. A lot of selling pressure on that Russell, a lot of selling pressure that we can see also on the NASDAQ as well, which again, I think is going to take a little bit of the wind out of the sails of the Dow Jones and the S&P 500 respectively. That's just one of those things as well. It's making it very, very difficult to get really excited about it. Joseph Solana's NQ is my favorite. You know what, buddy? It used to be my favorite too. And it took the wind out of my sails. Now I'm a boring Dow trader, but it seems to serve me really well as well. What I do love on the NASDAQ is trading the options on the QQQ's ETF. The QQQ's ETF is my weapon of choice on here. That is a great market there, the QQQs, for doing options on that. So to understand a little bit more, deal with that volatility a little bit more effectively, that's the market that I tend to use on there, Joseph Word. But I've traded the NQ for a lot of my students in StockAbility trade that as well. So if you can handle it, enjoy it, my friend. I can definitely see some attractive benefits in that as well. Also, let's just look at some of the other major markets that we've got on here. Let's go on over to our overall market watch and see what we've got on here as well. Anything on here? Facebook down $1.94 on the day that we can see. Amazon up $35. Let's just take a look at Tesla up $14 today. Also, some of the other big names, $11.85 rise on Google. And also one of my favorite markets, Apple, having a great day, battling around $1.30. I want to talk about Apple a little bit later on. Apple's at a key benchmark point of around $1.30. Can it go higher? We've been waiting for a bounce on Apple. It finally seems to be happening. It looks like a good week. Is it going to continue next week? I'm sure Brian and I have a discussion on that when we do your call, my put a little bit later on in the show as well. And on the major commodities front on here, taking a look at gold and crude oil. Gold still holding around $17.50, up $15 a day at $17.57.3, and crude oil down 15 cents on the day, hovering around that important price of $60. I got a feeling there's some bears on the crude oil market right now. Maybe even one of our guests, or maybe our guest Brian, might be bearish on crude oil as well. I know he's been sniffing that bearish kind of vibe for a little bit over the last few weeks, but rather than me speculate on it, let's see if he's actually here on the show. There he is. There's the man himself, Mr. North Carolina, as I call him. When he opens his mouth, you can tell obviously that is a joke, right?
Yeah, exactly. Yeah. I am far from a Southerner, but I'm finding my roots down here.
But
I
you
love
are beginning to enjoy being a Southerner. I know that, right?
You know what it is? I wish I moved down here earlier. I was just taking a hard time convincing my wife.
Now she don't want to leave, right?
Yeah, exactly. It's the quality of life. It's the air quality, even though right now the pollen looks like we had a blizzard of snow last night. It's so dark green here. That's why it might sound a little nasally, because I'm highly allergic to I have spring allergies, I should say.
Absolutely. You are looking a little bit kind of peaky in the eyes today as well, but an allergy thing, right?
Yeah. I also met a friend for a couple pints last night, so it might be a
right. Now the truth actually now the truth actually comes out. The great thing
Yeah.
about trading, though, is it doesn't have to be a full-time gig. You can do it from home. Doesn't matter what you look like. The markets certainly doesn't care what it looks like as well. How have you been enjoying the markets over the last? Before we get into our futures focus, how have you been enjoying these markets? Because a lot of people have been messaging me lately, Brian, and they've been saying, "Oh, I hate the market. It's really choppy. I'm not enjoying it." I mean, let's just go back over to the charts that we were looking at here, and I'm going to go click on the Dow Jones right now. Let's highlight that here. Let's highlight that down, go over to the charts where you can see it. People complaining about this price action that we're seeing around here, okay? This kind of chop. I got to be honest with you. I love that. It doesn't bother me, really. What about you? Are you someone who doesn't like that, enjoys it, deals with it, and so on? Tell me what you think about that, Brian.
I can be honest with you. One thing that I've learned is that I've kind of just taught myself in these markets that I just get out a little bit earlier. I'm looking to get out of my trades earlier because if I try to go for my normal trade, I'm getting stopped out flat or something like that. So I just curtailed my trade because even though the market is going higher and higher and higher, you know, I'm like a perennial bear. Like I love the short sell, and I know I'm fighting the trend in a
Yeah.
way. So if I'm going to take a short, it's a high quality area. I'm just getting out of my trades a little bit earlier, and it's been working for me. So I'm navigating these markets with my toolbox. I got a toolbox, a tool for every market condition there is. And in this market right now, I'm happy. I'm making my money every day, and I'm just keep moving forward. It's not as much as I was, but that's okay.
Yeah.
You know what? Those times are going to come. And then once the market gives me a signal of, what it might do going forward, then I'll take advantage of it. But right now, I'm just getting out a little bit earlier. I mean, you could see like even you were talking about oil before,
Yeah.
it looks like, 10 days in a row, it's been trading in a tight range.
Yeah.
So if you're trading that, you're probably getting chopped up.
Unless
Okay.
you've got really disciplined, good rules, right?
100%. You
Because
got to have
As Joseph's
self-discipline.
saying on here, as well, like, you've got gaps, right? You've got gaps like here. I mean, there's a really nice buying opportunity, I feel, down at this area here, which could take this thing go. And like a longer term trader, somebody a bit more patient, might be sitting on their hands right now and saying, hey, I want to wait for that. You ask yourself, hey, and there's nothing wrong with that. And maybe you'll make your month's money taking a trade like that. Me personally, I like to get involved in the action, but I'm an opportunist and I love market conditions like this. But I also love market conditions like this. It's just about reading the market. And sometimes I think you just got to be realistic with those targets. That's where people go wrong. They don't have enough patience. They don't get realistic with their targets. Brian, there's this idealized world out there about trading and investing, which I'd love to kind of talk to you about here. This ideal world that, it's just that everything has to be 3-to-1 trades or 5-to-1 trades and the perfect setups. Sometimes it gets real dirty, doesn't it? And ugly. And you have to, and there's nothing wrong with that, but you just have to have rules to deal with that, right? I mean, is it okay? I mean, I like these conditions. On the other days, I like the markets that move. But personally, give me conditions like this for the next 20 years, and I'm a happy man. People might think I'm weird saying that, but then I use a market like futures the right way to capitalize on that. Do you have a preference? Trending days, choppy days?
Honestly, I don't really have a preference. Trending days to me are a little bit trickier.
Yep.
But if I stick to my rules and I'm patient,
Yep.
that's you said it before. Like patience is key. Even now with the market being the markets being choppy and stuff like that, I find that I'm being more patient. I'm waiting for my setup, and if it's not there, I bite my lip and I go for a walk. I get away from the computer because I don't want to hit the keys for the sake of hitting the keys.
Yeah.
Okay. And getting back to, look, if today's not the day, today there's nothing there. It's an inside day. It's trading sideways. I don't see a whole lot of opportunity. If I do, I'm going to be in and out fairly quick, and that's okay. But there are some days like I don't see anything. Maybe I'll take a small trade and put a little money in my pocket and I'm done. Tomorrow's another day. Maybe tomorrow's a better opportunity because you can make your week in one day. How many
You
times
can.
have you done that, Sam?
Yeah.
Where you found your perfect opportunity, and you know what? It worked out great. Unfortunately, today I had a great opportunity lined up in the RTY. There you go. But I missed my entry by 2 points, and now it's up 30 points from there.
There you go.
All right, but but I was disciplined. I'm waiting for my setup. It didn't hit my entry target where I have everything set up. I'm a little on the conservative side with what things I like to do, and that's perfectly fine.
Well, you need to be the way your wife wants to buy houses and stuff right now.
Yeah, I know. Oh God, 4 times a week I'm out there looking at houses all over the place. It's exhausting. It really is.
And good for her, man. It's all good, but it's exciting when you're out there. But yeah, you need to be conservative sometimes, and
Yeah.
it's a much of a red light green, and that's part of the game as well, isn't it? Sometimes you just have a great idea of something that's going to work, and then it doesn't as well. It was really interesting today because I'm going to show you a video. I record a lot of my trades. I record when I'm in them or just after I'm in them, give a bit of commentary so I can share them on social media. Because, the problem you get when you're doing a show like this or you have a company or anything like that, people are like, oh, it's great you say this, but, I want to see you walk the walk, talk the talk. So we're very much about that, putting things on and just showing people. And it's about gratitude. And I've become known on the social media as this opportunist. Like I just get in, I pick the pockets, I get out to talk about, and I use the quote of the great Larry Williams, who's won the World Trading Championships multiple times, get in, make your money and get out. And I've always said this to students. You don't need big moves. If you can be disciplined, you can go for the big moves, and there's nothing wrong with that, by the way. If you can be disciplined, sit on your hands and wait for the big moves, that's fine. But then if you're going to do that, guess what you got to do? You got to allow the big moves to play out. If you're going to be more of an opportunist, you got to say, well, I could take a X amount, $100 out of this trade, and it goes on, it could have made me $500. Well, shoulda, coulda, woulda. That's just the name it is. You got to be happy because I say this is all about consistency. You take a job, you get a salary, you know how much you're going to earn every day, right? Unless you get a pay rise. You have to kind of be like that in the markets, right, Brian? Like just accept that I've got to go. And I'm not about limiting myself and all that, but I'm about being realistic. And I think one of the biggest challenges people have is they're not realistic with themselves, right? It's you can get into this world where you think that every time you're showing a bit of green on the screen it's going to be a big move. Has that happened to you? It's again on the roller coaster and you never want to get off. Right?
Well, that's a very interesting point because when I first started, I would move my targets. Oh, looks like it's going high. If I was long, obviously.
Right,
oh,
you're
like
in
it's
it.
going higher.
It's going to go higher.
It's going higher. It's going higher. I move my target. Next thing you know, it hit my first target. I didn't have an order there, because I moved it up. And what does it do? It goes back down, stops me out flat. So now I am more disciplined in following my rules. And if I sell something and I made $100 on it and I got out, I could pat myself on the back and say, you know what, Brian, that was a phenomenal trade because you followed your rules. Okay, it went up a lot higher afterwards. Okay, but how many times has it hit your target, traded sideways, came back in and sat there for another day or two, or it went straight back down to where you entered or something like that? Follow your rules and you're going to be happy at the end of the day, and you're going to be able to, what I like to say, move the rock forward every day. Just keep moving forward.
Keep moving forward because to me, there's a lot of things that I don't care about losses anymore. You take that on the chin.
They happen.
You be a grown up about it. But you know what I don't like is when I have opportunity to make good money and I'm going for the next target, constantly trying to get more of it, and I give it all back. That is what I don't like, is when you give it all back. And then a lot of people have been reaching out to me and saying, you do your own education now, you got your own thing. How are you different from everybody else? I'll tell you how we're different, because we just are realists. I was leading a session yesterday, guided trade session we were doing yesterday morning, 9 a.m. to 10 a.m. Got short on the market, hit a real nice trade, hit probably about 3-1. I think it was up about 1,000 or 1,200 at the point. And I said, look, I'm locking in $1,000. And they're like, why? I said, because it took me 30 minutes to make $1,000, right? And guess what? I don't know many jobs where you can make that kind of money, right? And I don't want to be in front of the screen. I don't want to be worrying about the trading more. I've hit my target, and it was a setup. There are about 50 of us in the room right now. It was a setup with rules as to why I was taking that target. Because then someone's like, well, it could go lower. Yeah, it could go all the way back up again. And you know what? If I'm going to pick a spot where there's a great chance for the market to turn, I want to try and get paid out of that, and that's it.
Yeah.
And I've got like that. And it's funny, there's this old saying, Brian, you've been in this business industry a long time. A lot of these gurus and education experts will turn around and they'll be like, you're going to go broke taking easy profits. You'll go broke if you keep taking profits. And it's like, really? Yeah, you'll go broke if you take small wins all the time. I'm like, you'll also go broke if you keep taking small losses. It would be a death by 1,000 cuts, right?
You're 100% right.
There's no, but the thing is, I've got Fly in here in my studio with me right now. Okay, he wants a piece of the action. Your spot will be on in a minute, son. The point is, that I think that I don't mind taking a profit on a position if there was a rule and evidence to back up why. Because here's the thing, you could say, well, 2-1, putting pressure on yourself. Yeah, but that's all the market was giving me yesterday. Now, people go, well, how do you know that? Well, I have back tested it. I have rules to predict. Because let's face it, Brian, this is all just a probability game, right? But you have to have a system where you can kind of go into this and go, well, based on the statistical evidence I'm seeing, this much profit's on the table today. Now, another day, I'll be like, well, this much is on the table. Now, case in point, let's pull up a chart and talk about this for a second. Let's go up on here and we can look at the charts rather than just talk about it. I'm looking at the Dow today. Now I'm going to show you the trade in a minute. I was short. Now I want to go down to a smaller time frame on here. So let's just go down to like a 30-minute chart so you can see it. So today I was a short seller on this market right around here, and I closed out right around here, and now it's gone all the way back up. So if I was still in that position today, I'll zoom that in for you. If I was still in that position today, I would have actually been stopped out now and had a loss. Okay, instead I've made money, and I'll show you the trade in just a second. It was a very similar setup yesterday. Got short off of here, closed out around here. Because I've actually not seen any good quality buying opportunities until down here. So I'm trying to ride this trickle to the downside in the meantime. That's all the Dow was giving me on that particular day, right? Now, if we go over to the thing that you like, I know the Russell, we were looking at this yesterday. Let's go look at the RTY right now. Now, the RTY, this is really interesting. I'm going to go and draw a line on the chart for everybody around 220. So let's just do it here. All right, let's just extend it to there. All right, so it was around 220 where you can see my line is. Now, yesterday, we also got into the market around here in the guided trade session, but this was the target right here. A much bigger profit to the downside than the Dow, because that one and that trade offered about, I think, a 6 or 7 to 1 opportunity, whereas the Dow was only a 3 to 1 opportunity. There were stats on the charts that were giving that. You understand? It's about understanding and looking at the charts and saying, hey, this one offers me X, another one offers me Y. And then the problem is a lot of people focus on too many things, right, Brian? They jump from market to market to market without reading that market in depth.
You know what's funny? I'm so glad you just said that. It's a perfect segue. And once I narrowed down my my trading to, I look at the YM, the RTY, and I also look at the NQ. But the NQ, I think Graham, he calls it the honey badger.
The honey badger, right?
You know, it's a beast. It's a beast.
It really is.
You know, so when I trade the NQ and even some of the other ones, I'll go down to the micros. Okay, because with the volatility, you know what? I'd rather have a whole bunch of little micros and I could scale in or scale out or something like that, and that's perfectly fine. But now, since I've been watching the RTY and YM and the NQ, you can become more intimate with them. And I knew in the back of my head, I'm like, man, if this RTY comes back down to that 2200 level, I noticed in the past that that was a level that they loved it and wanted to buy it there. These bigger institutions or whoever it is know that there's value at that level.
This is a big level where I'm suffering right now. Big level.
Yeah, and I made a mental note. And my zone, I think I drew was like 204 to like 197 or something like that. But I hit 207 or something like that today.
Yep.
And then now it's up above 30. So it's a 20-something point move already, you know. But hey, you know what? I follow my entry rules because that was the one thing that I struggled with for the longest time. So, but me just narrowing down what I trade every day has made me more efficient in my time and more effective in my trading. So it's really helped me out. Yeah,
that's what it's all 100%.
About. Like you said before, you don't want to sit in front of the computer until, you know, from 9 to 3 every day. I'd rather trade the morning, you know, 10 by 11 o'clock. I'm normally done, you know, good or bad. And I just kind of move on with my day.
Yeah.
That's my range. And I got other things to do in my life. I got plenty of students to start talking to and helping them out.
One of the students I know you're talking to, just chatting in on the chat here, Peggy Jerome, saying, Brian's correct. I've also learned about taking reasonable profits the hard way. Short the Russell this morning. I took my profits with discipline, made 600. Good job, Peggy. I mean, and look, because if you hadn't took your profits, look, you've given them all back right now. People don't understand
good job.
it, you know. And she says hi, by the way. She says, tell Brian I said hi.
Tell her said hello.
There you go.
Well, she can hear me.
There you go. She can hear you. You know, it's just about doing it right. Now, we're looking actually at this, and let's focus on this for just a second as well. A lot of people are, well, what are you talking about here? What markets? Here's the RTY. The RTY, and look, we can't teach you everything about futures, right? But let's spend a bit of time talking about this. I always encourage people, and I'm going to go back over to the chart so Brian and I can have this kind of chat on here. I've always encouraged people that if you really want to be a day trader, one of the best ways to do it is 2 ways. Either options, and believe it or not, you can day trade options. But although I personally, and it's a StockAbility policy, we try to look at options trade over weekly trades and monthly trades. You know, but I think some of the best day trading vehicles, really, or the best day trading vehicle is futures. Now, you know, futures can be incredibly confusing when you first start for people, but what an amazing vehicle. Because again, if we just go back over to, and I'm going to just pull up again, just because I can show you this morning's action and look at this right now. Let's go back over to the charts, Brian. We're looking right here on my charts right now. I'm looking at the Dow Jones, okay? So this is the market that I'm looking at, YM, Mini Dow Jones Industrial Average Futures. Here, let me just kind of highlight that for everybody so you can all see that at home. This is a futures contract of the Dow Jones. Now, you'll know there's 30 companies in the Dow Jones. That's why it's called the Dow 30. But the Dow price, if you actually look at the index, if you could trade, okay, let me just go on to this as well. This market here, right, is right now, and I want to highlight this for you. Zoom in. Hopefully you can see that, Brian. We're currently trading at 33,341 points, okay? That's basically a $33,000 stock, right? That's the simple way of doing it. That's the price, my friends, of the Dow. Now, you think, guys, you think Apple's expensive, okay? You think markets like Apple are expensive? Take a look at this, okay? You look at a stock like Google, for example. Let's just go back over here. What's the price of Google right now? Let's just see if we can zoom in so we can see it, okay? Zooming in, you've got $2,263. That's an expensive stock, right? A very expensive stock. Let's put that back in perspective just one more time for everybody. Go back over to the Dow. Because Dow is 33,000, my friends. That's a $33,000 stock. So you think, well, how can I realistically trade a $33,000 stock? Okay, well, you can you'd use a futures contract, right, Brian? And what do futures do for you? Because I think the thing is, say, well, that's great. I could trade a $33,000 stock. But the question is, do I need $33,000 to buy one share of it? What's your answer to that?
Absolutely not. Absolutely not. So there's a lot of people don't realize this, but if you took off the symbol, I don't know if you have a watermark on there in the background or whatever. Mm-hmm. If you took even the prices off and you just looked at that, you would not tell if that's a currency, a futures contract, or even a stock. A chart is a chart, people. Now you have to figure out, why are you doing this? Are you looking for daily income?
Yep.
Okay. Are you looking to swing trade? Are you looking to build a wealth account? I mean, there's so many different moving parts to this when you really break it down. So by using a futures contract, okay, it's more efficient with your money.
Yep.
Okay. So if you have a small account, say you have a $5,000 account, you're not going to trade stocks. That's a waste of time.
Yeah, and you can only do 3 trades a week anyway, right? And
exactly.
And your position size is tiny.
Exactly. 3 round trip trades in 5 days. Where the futures market, okay, you could trade the micro equities, okay, with the day trading rate. I think like if you did the RTY or something like that, it's like $250 per contract.
Yeah.
Or the YM might be like $900 or $1,000 per contract. But those contracts will move. There is volatility in there where you can make money, and also your downside, especially if you're starting off, it's a tremendous vehicle to trade on, because now you can really manage your risk. I find that the futures market to be very technical, if that makes any sense, where it really does respond to these areas that we actually identify. Okay. And once you learn how to do that, it's more effective and you're more efficient with your time and also with the bank size. So right there, if you caught a 100-point move was that the YM? Sorry.
This is the Dow, 100-point move from 33,240 to 33,340. It's done about a 100-point move in the last hour and a half, 2 hours. Okay.
So if you were doing the micros on that, one micro, that's $50.
Yeah, so that's a $50 move. That is a 50. Let's just go back again. So anybody looking at that on the smallest account, so on one MC, that stands for micro contract. That is there a $50 move, okay, that's happened in about, I'm going to turn around and say, what is this, a couple of hours basically, all right? And here's the great thing about it, Brian, like on that I just was checking the margins, it's about $10,000 for the full contract, so it's about $1,000, but you get an intraday rate on that, so your actual cash in your account required to take that trade and buy that, if we were buying at point A and we were selling at point C, one micro contract, by point B, excuse me.
Well, that would be the mini, wouldn't it?
That would be the E micros, yeah. So the micro contracts.
So yeah.
So the E mini contracts, but let's go on the smallest amount, which is what we call the MC, the micro contract. Yeah. Okay. Let me just write that on here. I'm just using my mouse to do it. One micro contract, your cost or money required in your account to buy one micro contract would have been $250. Okay, normally 1,000, but you get this intraday leverage with a lot of brokers. $250, and then your profit, if you closed out right now, would be $50. That's not a bad. What is that? 20% return on your money? Okay,
that's not bad.
50, using 250 to make that. Now that is great. And that's what one of the things we all about. Now, you say, well, $50 ain't going to change my life. Really? You do that every day, there's $1,000. And are you going to stay just making $50 trades? No, but what an amazing time. Because, on that same trade to make 100 points, if you wanted to make $1 move on Apple, yeah, you could make, or let's say a 50-cent move on Apple, you need a lot of money to do that, if a whole lot of money to do that. You need more money. To buy 2 shares, it's going to cost you, 2 shares of Apple's going to cost you $250 right now. Right? 2 shares of Apple. And then if the thing moves $1 in a day, guess what you're going to make? $2. Right? Yeah. I mean, put it in perspective. Isn't that a wonderful thing? Is there a downside to this, though? Because this is a great use of leverage, right?
It's a tremendous use of leverage. And here's the thing, too. Say you start off with a $5,000 account and you only have $250 towards one of those contracts. What else if you bought 4?
Right.
Okay. There's $200. That's $50,000 a year.
Right.
Okay. How many people would love to have an extra $50,000 a year coming in on, and by the way, you know what, you might be risking. Let's always, talk about the downside part of it is how much you're going to risk.
Right.
Okay. Well, I only want to risk $100 a trade, or I want to risk $20 a trade, whatever it is. You could fit those in your parameters of how much money you have, how much you want to risk, and figure out the formula, of how much you want to risk on every single trade.
Mm-hmm.
Okay. And then you could just move from there. So I always tell people, when the market gets volatile, you don't need, to have an ego and trade the minis, know?
Yeah.
You're going to get whipped out and you're going to be, so mad at yourself.
Yep.
Drop down to the micros and just add, trade multiple. Okay.
Well, and that's it. Like, there's no skill. Let me put it real quick. And
be versatile. Be versatile.
Let's make this realistic for just a second. Yeah. There's no difference, is there, Brian, between making $50 and $5,000 if you use the same routine? That's what people don't get. Like, that skill to make that 100-point move in that Dow is the same skill required to make a 100-point move on a Dow with a bigger size, right? So if you did one micro contract, you made $50. If you did one full-size contract, you make $500, right?
Right. Yeah, because it's the same system. It's the same thought process. Nothing changes. If you do the same thing over and over again, you're right. It doesn't matter if you have 1 micro or 10 minis. Okay? You're going to see the fluctuations, okay, in the money and stuff like that, but if you just get past that and pay attention to the process, you'll be fine. Even when people start off, and they'll say, I want to trade. I'm like, okay. I tell them, take a stock and buy 1 share. Now you have skin in the game, because sometimes people, when they start using simulated, I think that's a great tool when you're starting a new platform and you don't understand a lot of things, but it's not real. Okay, because when you hit that live button and you're in a trade for the first time, you get a little juice flowing. You know what I'm saying? You get you get that because it's money. So if you get used to having money on a trade, whether it's 1 micro or 1 share of a stock, now you're not going to lose a lot of money, number one, and you're going to have that feeling. All right, I'm in a live trade. Hey, I just made $50, $20, $30. I lost 10. But now you understand what it feels like. And then once your process is ready to go, and that's when you can start adding more contract size or share size, depending on what you're doing. But most likely for getting back to your original comment, the income side of it, futures is by far the way to go.
Let's just write it on the board again. Hopefully you can see this, right? $50. So that's a 100-point move, right? That we've had in a couple of hours. On a 100-point, the minimum profit is a $50 move. Okay, that's the minimum. There is no maximum, okay? And again, the cost to enter that trade, the money required to enter that trade intraday on those margins right now is $250. To me, that is awesome. That is just a game changer. And because years ago when I started, I've been doing this for 18 years now. When I first started trading the futures market, you only had big contracts. The margins were big. They were big. You'd need like 10 grand to take 1 trade on a mini contract, Now people, unless you had at least $10,000, you couldn't even open an account, and probably more than that. Today, people can get going with literally a couple of $1,000, small. And again, people ask me, well, if you was going to make that $50 profit there, what kind of risk? Again, I have to, you say, this is based on your own strategy, but looking at the judgment on there, the side of the zone that you're going to be looking on that, you probably wouldn't be taking more than about a $10 risk on a trade like that. Okay. If that would have gone wrong, you'd have lost $10. If it goes right, you made 50. That's not a bad risk to reward ratio. You understand? And people go, well, I need to make more. Well, guess what? We all want to make more, but you've got to get good at doing one thing and build it from there. And I think where the reality comes in
Good
this is when
point.
people
Very
come
good
in
point.
with all these get rich quick ideas is, you take a job like a lawyer. Okay, how many years does a lawyer have to work at the top of their game to make partner, right? To have their own firm? How many years does a doctor have to study, to become, a specialist in what they do? This isn't going to take 10 years, but it's going to take a little bit of time, but you start small and you build up from there. Patience holds people back, doesn't it, Brian? That wanting it now, because I think we have that mentality, right?
No, 100%. Because people, when they start looking at this, oh, it's gambling. I want the big bucks. I want, all or none. I'm going to go in. I'm going to put everything on black. This is not that way. This
Yeah.
is very controlled in the way that we teach it. Or if you learn how to do it the right way,
Yeah.
you're going to learn how to control your emotions. You're going to learn how to control your risk. You're going to learn how to, have a disciplined plan to get out at certain points for profits. Okay. It's a great tool, but you got to be disciplined. That's what it comes down to. You can't go for the home run or go in and say, "Hey, I got a $5,000 account. I'm going to buy, 25 micros, which is the whole $5,000." No, that's very stupid, right? Because
that's a nice way of saying it. That's
yeah,
very stupid. That is a real nice way of saying it, Brian.
no, it is.
Well, it really is,
Because
and
what's your risk going to be then? What are you going to be risking half your account?
right, exactly. And I've been there, I've done it as well. So let me stress to everybody on who's looking at the show right now. We're talking about futures if you've just joined us. We're doing a focus on futures. We can't teach you everything there is to know about futures right now, and we're introducing this concept. Futures are a wonderful thing, but like everything, there's leverage, they're a double-edged sword. There's all about having a process behind every single one of this. But we just show you it's a great way to start. We can see Peggy in the chat room here just saying that she made $600 off of this as well. And I'll get to everybody's questions as well. Joseph was just saying on here, Joseph Solana, Sam, how am I supposed to learn a new way of trading, such as if I join your group? I don't know if I can get rid of my old thoughts in my head and learn someone else's trading rules. Well, that's a real simple thing. I always say to people, do you want me to give you the sugar-coated answer to that or the one that's going to help you? If you feel like you need to learn a new way because the way you're doing it isn't working, there's reason enough, right? I mean, it's like, don't beat your head against a brick wall. It can be really hard, like me, I look at it with golf. I played golf for 15 years right now, and I'm still as bad as I was 15 years ago because I've not been doing it the right way and I've been stubborn. But the fact is, I think if you want change, you got to change, right? Change requires change. One of my favorite quotes is, if you want to achieve something you've never achieved before, you got to do something you've never done before. So it depends on really how bad you want it. And one of the things I think, Joseph, and I don't know your particular style, but one of the common problems I run into a lot of people is they just don't keep it rules-based enough. I'm going to go out as far as say this to you, Brian. And yeah, jump on a call with us, Joseph. We're more than happy to have a chat. Brian will have a chat with you. Any of our team will have a chat with you. But
Yeah, Joseph, give me a call, buddy, anytime.
We're here to help you, But the thing is to understand is you can learn a process, but it's also not about, he makes a point, how can I learn someone else's trading? That's actually the thing I don't want people doing. People shouldn't try and learn somebody else's style. I taught about 60,000 people now in my career. The best students I've ever had, I gave them a benchmark. I gave them a framework. I mentored them. I said to them, look, these are the things you need to do on a day-to-day basis. How to buy, how to sell, how to manage risk, how to set targets. Here's your framework. Now go create your own plan. Don't be a copy of me. In my trade room, I'll have times where I pass on a trade and the students take a trade and they make money and I don't. Sometimes I'll get in a trade, I have to close out, they're still with it, they make money. It's about knowing when to get in, when to get out, and how to behave. It's more of a lesson in learning how to behave, learning how to have a process, having a system. And again, I think we've talked about this a lot, haven't we, before, Brian? There's a big difference between having someone's strategy and being able to build yourself a system. We pride ourselves on building systems. Do you want to add to that?
You have a very good point there. We have tremendous concepts on what we're trying to teach
Right.
or instruct our students, because everybody is different, especially when it comes to this.
Yes.
Because you're going to have a different personality, you're going to have a different size bank account, you're going to have different times that you could trade, how much time can you actually put towards trading. So everybody is wired differently. So conceptually, we will give you the foundation that you need, but then you are going to tweak it to fit your particular personality, your style of life, your bank account size, your time, and stuff like that. And we can help you along the way with those things. Too many people just want to copy Sam or copy Ryan. Well, you know what though? You're not them. You have to identify and be yourself. Hold yourself accountable. Put the time in, put the work in to understand what we're teaching, understand our concepts, and move forward from there.
That's
Okay.
how it is. And you can ask Graham. Graham Spruce just joined us watching live right now. What's up, Graham?
Hey, Graham, what's up?
Graham, one of our lead coaches at StockAbility, does 3 sessions every day. I think we probably were doing one this morning, right?
Yeah,
With the
he
group
does a
as well.
phenomenal job. He
I
does. He's very
mentored
disciplined.
Graham.
I love following him. I love watching Graham. He's phenomenal.
I mentored Graham. Graham, you know, but he's found his own style. Right? He's not a copy of me, thank God. Lucky man, you know?
Yeah, really.
Trust me, you don't need any more of me running around, okay? So it's all good. But it is about finding your own style, Joseph, and that's what it's all about. In fact, I want to show you this. So if we go back over to the charts and take a look at what we were talking about today, and I want to go back over to that Dow Jones. So let's just go over there to the charts and look at this again together. So again, we can see, and I'll recap this. I'm going to show you the video of it. I'm getting really technical now with the broadcast, Brian. So I'm even going to show a video here. Here's that fly again. He wants a piece of the action. All right. Yeah. I should have had a shower today. What can I say, right? So it's no, just kidding, right? But listen, at the end of the day, this is, you know, a trade that we took up the top here, that I took into the market. So I'll just highlight this point for you all here. Closed out somewhere around here, you know, and then could the market have gone high? Now, yesterday I got into the market here and I closed out here. But then guess what happened? It went what? A whole lot lower. Today I closed out with the same methodology for my targets. Do you think I'm glad I closed out the trade down here today? Yeah, because what? The market's bounced all the way back up. So the point I'm trying to make here to anybody who wants to be a futures trader, an options trader, an investor is you've got to have methodical targets. Knowing where you're getting in, knowing where you get out that are going to work in all market conditions. And rather than just talk about it, I thought it might be kind of fun, Brian, to actually go and take a look at a little video here as well. So I'm going to walk you through this today. Hopefully you can see this as well on here. So this is
I got it. You're good.
This is a recording, and I zoom in on here so you'll be able to see it, because I know you've got pretty bad eyes right now from the allergies, not the beers you had last night. But look, we like to have fun on here, right? But look, this is the trade stage. So I'll zoom in so you can all see it on here. So this is a recording on my screen today. Okay, you can see that 9:42 Eastern Time. The market has been open about 12 minutes. Today's date, April 8th. You can all see that, I hope, right here. But take a little look on here and you'll see where I entered this. I'll put this together and I'll walk you through this right now. So here's the trade. And let me just pause it right here where I zoom in. You're going to see me highlight. Here's my entry point, which was just around this particular point here. And this was what I call my stop loss. Now, you won't be able to, I don't know how well you can read that, guys, but that's $300. So if this trade would against going to me, now you're thinking, what's happening? I'm making money when the market went down. It's called short selling. Okay, so I'm in the trade. I short sold at 33,323, which is right here. Okay, I'm gonna mark it off right there. Okay, this is on my other computer. And if it was to have gone wrong and carried on going, I would have automatically been out and lost $300 on the trade. Okay, that's it. See what we've done? We've capped our losses off ahead of time and done it all that way. Let's carry on and see how it worked out. So we're zooming back out right now. Now at the time, the market is up. I don't know if you can read that. $1,125. Okay, but notice what I have here. Now, Brian, you can probably tell me what that is there. That says B03 at 1305. Can you tell to our viewers what that is there?
Yes.
What is that?
Now keep in mind. Now keep in mind too. Now you're using the full contract. You're using the minis.
Yep, I am.
So if you're using the micros, you would only be risking $30 to make
$130.
What's that? $130.
Yeah.
Okay, so that would only be $750 of your money compared to a little bit more of what Sam is using. Yeah. I just wanted to make sure that they understand the difference.
Absolutely. I trade a slightly bigger account, guys, and so on, but you'll see, I risk $300. Okay, so again, we'll go back to make, here's you can see, $1,300 in here. You see that, guys? So let's just see how this played out. So this is the recording of it. So I was talking through this right now. There's my target. You can see that I hit on the chart there. Okay, and what we're looking at right now. And okay, guys, if you're looking at this is not live now. This was from this morning. So you'll see this was a recording I was taking while I was trading this morning at 9:15. Now you can see my exit. Let me zoom in so you can see my exit. 33236. I want you to remember that. 33236. Now this automatic order, if it hits this area, and this is the market price here in yellow. If it hits that area there, what's going to happen is it's going to close the trade out immediately. So, you can see you just stick to your guns, stick to your plan, let the market do its thing. Okay, don't get too panicky. Here we go. And you'll see as it hits that area there, it's going to close out the particular position. I can tell you it did. There you go. See it closed out? Now, look, let me pause this for you just a second. Here's where the market was just on the thing. You can see that big red candle, right? Could this market have gone lower? Could it have gone lower from this particular point? Absolutely. But what did I do here, Brian? Closed out the trade and I'm done with the position, okay?
You followed your rules.
Followed my rules, right? Literally followed my rules. And we'll just play this again and we can just zoom in so you can see the closed results on here. So look, the time on here was now 9:43. Okay, so you'll see at the top here, $1,305 profit. And the time on this trade here closed out, I'll just pause it right there, was 9:43. Worked out about $100 a minute. $100 a minute, okay? Now, could this market have gone lower? Absolutely, it could have gone lower. Let's go look at the charts, though, and see how that worked out. Did it go lower? Actually, it was a pretty good exit, I think, don't you? Because that was my exit.
Your bottom ticked, it looks like.
Pretty good exit, right? I'm glad I got out, because here we are, done. Now, could I have bought the thing? Could it have gone all the way back up again? Absolutely. It could always do that.
Yeah, you can't get into the woulda, coulda, shoulda game. You were saying that before.
You can't get into
follow your rules. You know, you had a great trade. Done for the day. See you later. Go enjoy the day.
Now, that trade, obviously, if I'd have done that trade, that were on a small size, the cost on that trade to enter the position would have been about $750. That was on 3 contracts, so 3 micros. That would have resulted in a profit of $130. And the risk on that particular trade would have been $30. So my worst case scenario is if that thing would have gone against me, I would have lost $30. Not bad on here. I just did it on a bigger position. Okay, I did it on 3 contracts.
4.5 to 1. That's phenomenal.
$7,500, made $1,300, $300. Now, I've been doing it a little bit longer on here. But the point is, a vehicle like futures allows me to do that. And I stress this time and time and time again to viewers of the show. I'm an opportunist, Brian. I'd like to get in. And I try to be very grateful. If I can make $1,300 in literally 13 minutes and move on, I'm done. It's a beautiful thing, right? Isn't it? And,
it is.
But, you know, you also have to say, like, here's the thing. Well, could I make more? Yeah, guys, I could do 30 contracts and make 13 grand. You got to go at your comfort level. I'm at a point where I have my comfort level right now. Are you at your comfort level, Brian? How important is comfort level when you're trading futures?
Very. I think it's important no matter what you trade, because if you're outside your comfort level, you're going to act emotionally and you are not going to follow your rules. You're going to get out too early. You're going to have too small of a zone. You're not going to give it enough room to breathe. You know, you kind of get you hold the mouse a little bit tighter, and you don't want to do that. You know, I would rather you just trade in your comfort zone, and as you build up your confidence, and you can go 1 contract at a time larger. So you don't want to go from 1 contract to 5 contracts, because then you're going to be losing your mind. You know, but if you went from 1 to 2, and then you said in your head, okay, I want to build up benchmarks and say, I have a $5,000 account. If I get to 10,000, I'm going to add a contract. If I get to 15, I'm going to add another contract. And that's how you're going to build confidence, because you're proving to yourself that what you're doing is working.
Yep.
Okay. So it's all about finding that system, the rules, and be consistent and don't stray.
Nice.
Okay. So you have to be just disciplined in your approach.
Well, if anybody here is interested in more finding about futures up, I'm really excited because actually I can go through this right now and just show you this. I'm going to just go over to our website right now and show you something pretty cool on here on the StockAbility website. And Brian, we're doing a brand new program as well that I'd love to share with everybody and tell everybody about right now on here. So I'm going to go to the StockAbility website and just show on here. Let me just bring this down so you can all see this. So let me just zoom in here so you can all see it. StockAbility.com is the webpage. Okay, if you scroll down onto StockAbility.com, let me go ahead and just take that down on here so you can see. If you go to under the education tab right here at the top left, you see this thing called the trading and investing orientation. And if you're brand new to the market, you've never really traded before, you're still trying to understand and find your way, we actually put together this great new program called the trading and investing orientation. It's $99, okay? And it's a kind of, well, you got a month to do it, but it's all self-paced, all on demand, a series of 20 lessons. Here are all the lessons from building a base. Let's zoom in on here. Price action and execution, business efficiency, asset classes explained, how futures work for profit efficiency, Forex, strategy and system, bringing it all together. Brian, you feature on this. I feature on it. Ryan Watkins, our other lead coach, features on it. I think a great way for anybody who's very new to this to start to see the nuances of the market. And you work with the students on this as well, right?
Yeah, I do actually. You know, like you said, this is for someone who's brand new, that knows absolutely nothing about it. Because right now, you don't know what you don't know. You don't even know where to begin. You don't even know what to look at. I mean, you can research stuff on YouTube, but do you even know what to look for?
Right.
do you even know where to begin?
Yeah.
So this is a beautiful package that's, what's about, how many hours long is this whole thing?
I'm going to say it's probably 15, 20 hours, and it's all self-paced. So you've got a
Yeah,
month
yeah.
to take it at your own time. There's quizzes, there's goal setting, you come away with a blueprint at the end of it of
Yes.
what your next steps as your trading and investing is going to be as well, right? That you and the team work on them with.
Yeah, absolutely. We're gonna, we'll talk in between there and find out what you like, what you didn't like, what you understand, what you don't understand, and we could work from there.
Yeah,
Okay? Because
and
like I said, it's a beautiful foundation for someone who's brand new.
yeah,
Okay.
yeah.
If you're more experienced, you probably want to look at something else. But people who are brand new, this is a phenomenal platform to start because everything is perfectly packaged with a nice bow on top, and it's going to cover everything you need.
Yeah.
Everything you need to get going.
Well, and I
Okay,
always
bro?
say this, and I'm always outspoken about things. I say it the way it is. I've been around long enough to say it. If somebody's not willing to invest $99 to find out how to do it right, they're probably not going to be that serious about it. That's the way it is. And I stress it to everybody right now. We try to do a lot of information. There's a lot of information out there on YouTube. There's all this other stuff. There's gurus and everything. If it was that easy to teach yourself, let's face it, everybody would be doing it, right? I don't have to say a lot more on it. I can tell you right now, I've been in it for 18 years. I like people to do it the right way. And again, it doesn't matter to me what people do, but I love bringing people's education and knowledge up on certain things, and I think futures are amazing. But let me say this once again: we are not educators. We're not registered we're not official brokers. This is for entertainment and educational purposes only. There's a lot of risk in futures trading. There's a lot of risk in options. There's a lot of risk in everything. If you're going to do
There really is.
just do it right. Okay, just do it right and take responsibility for it in that respect as well. So, guys, you know where to find us in that respect. And it's a brand new program. We launched it this week, $99. Great program. Do it on your own and work with Brian and the team and see if this is something you really, really want to do. And if it isn't, I don't know, go put $99 into something else, right? That's what I say at the end of the day. Brian, let's talk your call, my put as well. We come to the top of the hour, and once again, I say 45 minutes, and here we are. We must love what
Yeah, of course.
we must love what we do, my friend.
Oh, yeah, this is awesome
So
stuff.
we must love what we do. Let's go to the charts. Your call, my put. That's what it's all about. We want to look at, obviously, our markets and see on here where we're at. Are you bullish? Are you bearish? What do you got on the cards today? And let's go to those charts and take a look.
So I've been identifying or watching oil,
All right.
and
oil.
I'd like to see it trade a little higher. And I think it's a short. I think we're still going to test that $53 area. I believe it's 53. I have a zone marked off. I believe on the weekly chart around.
I gotta say, Brian, you have been bearish on crude oil for a little while now. In fact, a couple of weeks ago.
Yeah, I mentioned like $62 and went up to 64.
And I'm marking it off here. This whole region here, you've been bearish on $65.
Yeah.
So far, so good, buddy. You think there's more downside on it? I mean, you think
I do.
more?
I like the $53 range to get in. If you go right there.
Yeah.
Right in that area.
Around here, yeah.
A little higher, a little higher.
Here? 50,
Yeah, right there.
You're about 53. So you're looking at around, let's zoom right in. You're looking, and let's zoom out. You're thinking about a bullish play, right?
Yeah. I like that level.
At that,
if you're short, I like that for your profit.
That's your profit target, yeah, on this. So you're expecting still, would it be fair to say you're still expecting more downside on this at the moment?
I do. I think it's going to hold that $62. I believe that's 62.
I like this up at here as well. I like the pressure that we're seeing on this market right now. This is a real kind of line in the sand, I feel.
Exactly. I'd rather have it rally up before I, if anybody looking to get short, I would rather see it rally up a little bit before you jump in, and then your stop would be obviously above that top of the rectangle.
Let's go look at this on a daily chart real quick and just see, and then I'll zoom in so we can see it. I mean, it's very choppy, isn't it? I mean, I'd love to get into it at this particular point. I think there's two ways of playing this right now. I will take one more stab at these highs around the 61.5 area. But I got to say, this consolidation pattern that we're looking at right now on crude oil, let's just go to this and just kind of take the auto zoom out and just zoom in a little bit so we can all see it. There is a consolidation rate. I think that if we do break this whole line in the sand here, there's definitely some room for this to go down to that area that you're talking about right here around 53. So I think either a breakout to the downside if we break those current lows, or we just sell one more rally in that holding period right now. Because now that is a range, isn't it, at the moment?
It really is. That big red candle to the left that started that move down is what I'm looking at.
Yeah.
Where those sellers, I think they have more in their pocket. I think they're just kind of
They're just holding
sitting
back,
there.
right?
Yeah, they're holding up around that $60, $62 area like you were talking about. And eventually they're going to say, all right, we need to hit the gas pedal and get out of this thing. And they're going to drive it down to 53.
Mm-hmm.
And they're probably taking that money and going buying something else.
And I
Okay,
look at
that's
this
what
chart
they
on the
do.
left-hand side, if anybody's looking at this, and this is what gets me a little bit more bearish. I've been super bullish on crude oil for some time, but yeah, I just think that's a halfway point. I really got to say, I wouldn't be surprised to see this trickle back down to about $40
Oh,
is
yeah.
the number on there in time, but at least 50. I think at least seeing a holding pattern between these areas for some time being, so
Yeah, 53, you're going to get initial pop
yep,
off it. Whether it holds is another. Yeah, I mean, like you said before, it's all about probabilities and
it's all
stuff.
probabilities.
But that's a level that I want to get in, and I'm going to be patient for
Yep,
my long side if I decide to get it in there.
yep,
A
yeah,
lot of things could happen from now until then.
yep.
So we'll just see it. See what happens.
Like it, I like it. What am I then? So that's your put. I'm bullish then. It gives. I very rarely get an opportunity to be bullish, but I like being bullish. But everybody who comes on the show wants to be the bull. Apple, man, I'm bullish on Apple. We've been looking at this area for quite some time, I feel, looking at this whole consolidation of monthly price action. I think you can see it really nicely on this weekly chart if we really zoom in here. Holding
Great
beautifully.
Zone. Great zone.
I've been bullish on this for a while now. I'm holding call options on this, and I'm still seeing this going up to around this area here, around 135. The big line in the sand for me is right where we're at the moment. We got a ton of selling pressure right here at 130, but we break through 130, I might even be tempted to add some calls on the position and ride it up for another $5. But I will say this, if any of the StockAbility students are watching right now, I'm definitely locked in profit at this particular point. I'm not taking a loss on that. But I just saw this consolidation period. I mean, I think a lot of people got hammered on this low area. This is it on the daily chart here, Brian. The sideways action on this. To me, that screams of a whole accumulation area. Where people are just loading the boat before this thing marks higher. Just seeing it right now. Nice gap and continuation as well. Not seeing any real quality selling on these larger time frames. I think it's got 135 written all over it. I got to say, if you want to give me a line in the sand, 130. I don't like it. I'm already in it. But I got to say, anybody looking at it right now, I'd need to see this trading above 130 and see if I can get a squeeze of about $5, maybe even $6 out of it to the upside. What are your thoughts on Apple, Brian?
You know what? I can be honest with you, that support zone you drew down below was phenomenal. That's like an ideal setup. For you to get in there, you have your entry all picked out, you know exactly where you're wrong, and you have your target right on top here. So it looks like you're about, what, 3/4 of your way to your target, and that's a great zone. It's going to hit that zone. If it goes to that zone, it's going to waffle around there, and then we're going to see what happens. It'll probably continue to the upside after, but it's definitely going to react at that zone.
It's a little overextended for day. I'm not expecting a lot more. I'm maybe expecting this week it's going to drift. I got to get out of the calls soon because of the time value on it. But I think, again, if I could get that pop, there's an unfilled gap area space a little bit higher. Again, if I'm going to be super conservative, I'm going to say about 132 on that, 133. But again, it's a nice little spot on there. I think there's more upside on it. I think Apple is a value stock. I've been saying that before. It's a value play. It's a long-term play. I want it in my portfolio. That's the best price I got it recently. I think if this level holds on monthly areas, on weekly areas, we're going to see new highs on Apple. It wouldn't surprise me. It's not a growth play anymore. It's a value play. It's a big company with a lot of value. A great company, ain't going anywhere, and I'm a fanboy. I have to be honest. I'm an Apple fanboy, so it's all good. You had one more for me as well, didn't you? Say if we had time on the show, there was something else you were bullish on as well, right?
I actually I always watch gold.
Do you really? All right.
I don't trade it. Okay, I took my lumps on it years ago, and I kind of never went back to it.
But you like to watch it.
I do. I look at that and oil, and I look at.
It's like the
British
horror
pound.
movie. You've got a fascination with. You just can't sit through the whole thing anymore, right?
This also is a great something else I want to talk about real quick. So years ago, I had a phenomenal trade in gold, and I made the most money I ever made on any single trade was in gold. And then I'm like, I'm gonna trade gold. I love it. I love it. I love it. By the end of the year, I was negative in gold. And I realized that because I journaled all my trades, and I realized I love trading gold. I love trading gold. And at the end of the year, I'm like, I stink at trading gold. I had one great win.
Sometimes you got to be honest. Sometimes you got to
And
be
then
honest with yourself, right? And the truth hurts. That's because it's the truth, right?
reality was it was slap in the face reality check. So I always keep an eye on it. And so anyway, so I had a nice little demand zone on gold where I thought it was going to pop from, and it stopped just prior to that. But now I'm also noticing it's starting to take out prior weekly highs. So this could be a momentum play to the upside. You could probably get, I don't know, 60 points or so. I don't remember the exact number to the upside if you can be trading that futures contract. But I think we have a little bit of a breakout trade down here
It's
off the
not the cleanest
prior week.
area. I say it's not the cleanest area, but actually there is a support zone there. You can see with the rally, pause, rally, and there's a lot of wide open space above. I mean, if it can have a push, I'm not going to write it off that it could probably maybe knock on the door of 1800, 1820 at a push. I
Yeah,
think.
I actually, like I said, my demand zone was a little bit lower, but once I saw on their chart to the right, you had that low, and then when it retested that low, it was slightly higher, and
Yeah.
also it took out the
It's
prior,
definitely doing it.
it took
Yeah.
out the weekly highs and stuff. I think there's some momentum to the upside now,
Yeah.
so
I think if I'm
maybe I'll
going to
wait for a little retrace or something. Yep, right
I think,
there.
I think I'm being conservative. I'm going to say 1800. I mean, you might not get the pullback, but anyone who wants to take the conservative approach, I'd like it around this little area here for a pullback
Yep,
around the
yep.
1740 luck. So just gives us a little bit of an idea. I know a lot of students in the GTS were looking at that with me on Wednesday, and we were definitely, and it's actually not even just Wednesday, we were looking at that last Wednesday, not Wednesday just gone, the Wednesday before, and we were very bullish on there. I know Luis Tapia was definitely bullish on that, and a few of the other students, Ranger Doug and the guys in there as well. So
Yeah,
I
yeah.
like it. Hey, thank you for the extra little bonus. Like that very, very much as well.
You got it,
You
buddy.
you got I know you're heading out now as well. Got a little bit of a road trip planned as well. Where you headed?
Yeah, I am. Well, I got a couple phone calls to make. I got some students to discuss some things with over the next
Cool.
couple hours. Then I'm driving down to Myrtle Beach to
Yep.
visit my best friend.
Nice. Nice part of the world. Oh, well, it looks like we lost him. It looks like we lost. Oh, he's back again. Here he is. There we go.
Yeah, no, you froze up on me.
You're
Anyway,
back.
so I'm coming back on Sunday, so it'll be a nice little drive getaway. My wife is out of town for a couple days. She's up in New York City.
Okay.
So when she comes back next week, but I'll be down with my best friend for a couple days, which is I'm looking forward to it. I haven't seen
Nice.
him in a
Well,
while.
have a nice break, and that's the whole reason why this is such a cool thing. You know, call your own hours, do your own time, enjoy the
Yeah,
weather and
100%.
everything as
I
well.
agree. All
Well,
right, awesome, man.
we're appreciative of all your time on the show as well, Brian. Always a pleasure having you on the show. Join us in a couple of weeks again, if you will, my friend. Yeah.
You got it, buddy.
All
All right,
right.
everybody. Have a great day, great weekend, and trade safe. I'll talk to you guys later.
Thanks, Brian. Take care. Thank you so
All right,
much.
see ya.
Ladies and gentlemen, that was Brian Dumaresq, Student Momentum Coach at StockAbility. Once again, joining us. Always great to have Brian on the show. A wealth of knowledge and just a general all-round good guy. We love having him on the show as well. It always makes my life easier when I got somebody on the show who I can bounce ideas off as well. And do note those down. He's looking at bearish on crude oil. Looking at bullish on gold as well. Always a pleasure to have somebody like Brian on the show as well. We love that too. So we wish you a safe trip. What do we got coming up then? I mean, I'm at the top of the hour. I mentioned to you a few things on here. Let me go. We got some really cool things. Last night, I actually did a webinar on my own about side hustle to full-time income in trading, which we're going to repeat again. So let's go on over to the website, and I'm going to just show you going on the StockAbility website. Oh, look, double vision, Sam. You don't need that, you poor people. Go over to the main homepage of the website, and we'll show you on here. So if you click on the homepage right now and scroll down to the bottom, you will see all of our webinars. Again, we're getting a lot of Trustpilot reviews coming in right now for our education and our resources. Very happy to see as well. There's the whole team, Dan, myself, and Ryan Watkins. But more importantly, let's go down to here where we can see the upcoming webinars we've got, okay? We had one webinar last night. We're just updating the website that's done. If you missed this webinar, don't worry about it. We're repeating this complimentary webinar, Trading Side Hustle to Full-Time Income. And that's going to be on Tuesday, April 20th at 12 Eastern, 5 p.m. London time. I always mention London time. Being a Londoner, I can't get it out of my system. I love my home country. I love this country too. It's all good. But yeah, that is going to be that one, the trading from side hustle. If you with a bit basically of a focus more on the income side of things. If you were looking for something else as well, we're doing a very special event here, which I'll zoom in on. We're really excited about on Wednesday, April 28th. And what is this? This is our special one-day event enhancing your trading and investing performance, running from 10 a.m. to 4 p.m. Eastern time, Wednesday, April 28th. Go ahead and start registering that. It is an all-day event. Yes, we will take breaks, but there'll be Brian, there'll be Ryan, there'll be Dan, there'll be myself, a whole host of other instructors and and performance coaches, just doing a little bit of give back and sharing their tips to enhance your trading and investing performance. It is a whole day event, going to be joined by the StockAbility students and family, as well as anybody else who wants to come along for the ride as well. I promise it will be a fun day. We'd love it if you guys can join us for that. Go ahead, click on the register today button and be a part of what we're going to be doing on there. We would love to see you. And if you are newer to the market, or you need a refresher, or you just want to take your things to another level, brand new program we launched under education. Go down to the bottom here, trading and investing orientation, and we just put this together, which is 20 lessons, all self-paced, on demand, fully interactive, working with our student momentum coaches as well, to come up with a trading and investing blueprint. At the end of it, you do it all in your own time, in your own pace. There's some cool things like goal setting and all that good stuff. $99 is that program. You can literally just go on the website and purchase, and we'll get in touch with you, and we'll take it, give you immediate access, and by the end of it, I promise you will have a better understanding of the market that probably you'd get by going to school and studying it for a whole semester. So it's about getting through all the noise, getting into the asset classes, understanding how to structure your portfolio. We even have platform tutorials if you've never used a trading platform in there as well. A little bit of something for everybody. Go check it out. We're really proud of it. We love what we built there as well, and we're really excited about that too. So that's all I've got to say, guys. It's just after 1 p.m. Eastern time. It is Thursday. It's April 8th. I hope you guys had a great Easter weekend last weekend, no matter what you were doing. It was a bank holiday in Europe. I hope you had a great one here in the US as well. Always a pleasure, never a chore to be on this show with you guys. And we will be back the same time next week. Remember, this show is also recorded. Thank you for your comments. Let's give a shout out to Pedro, Joseph, Graham, Dara on here, Peggy as well, Parker, Phil, Scarborough as well, Mildred, all of you guys coming in, Dana, Joyce, Lisa, Mann, and everybody else who's watching the show as well. The numbers are increasing. We love it. We love being on here as well. We thank you for your support as well. You know where we are if you need anything. You want to just have a chat about the market and how you can take things to the next level. This has been Take Stock Live. My name is Sam Evans. This has been brought to you by StockAbility.com. Go and relook at the reruns of the show here on Facebook Live. We'll be back the same time next week. And if you want to catch the reruns, head over to YouTube and go to the StockAbility page, where you will find all of the recordings and all other good stuff on there as well. Go subscribe, be happy, enjoy the rest of your week as well. And thanks a lot for viewing. I'll see you at the same time next week. I've been Sam Evans. This is Take Stock Live. Thank you.